So I found another, a small startup that had just really got started, had about $7,000 a month in revenue in the accounts payable business, which I knew nothing about, but I knew one of my former employees was in the business and said, you ought to come in and invest in this and run it. So I did a lot of due diligence, and I thought, these guys will be the perfectly positioned in the small business space to handle all your accounts payable. Does everybody know what accounts payable is? It's just the bills. So you sign up with this company and they pay your bills for you. You actually pay them, but they handle all the administrative stuff.
They get a fee.
Yeah, they get a fee. I was assured when I did the due diligence, and I saw their books, that their revenue was $33,000 a month. And I was betting that I could take that revenue, which was up from $10,000 a month 6 months ago, so they just kind of started, and I could raise several $1 million with the fact that I've done a successful exit and raised a bunch of money before. So entrepreneurial it's a little easier when you have contacts, you've raised money before, and frankly, I had an ego. I thought I could do it. I get into the company, which was over here in Rockville, and they don't have $33,000 a month in revenue. They have more like 8. And that's not the worst part. It's down from 13. So they were trending down. In that business, this is another, I guess, a second point I would make is when you do a very early entrepreneurial venture, you've got to have the resources to do the venture. You can't. Most businesses, none of my businesses except for the MCI one that went bankrupt, that was just catastrophic. They all made it, but they made it because we had enough staying power to last until we did something. This particular business, I didn't have enough staying power. I mean, I thought I did, but we ground on and on and on with our product. A year went by, 2 years go by, we're still struggling. I ended up having to sell my house, which was not great. Got through that stage and got lucky. And this is another thing I'll point out to you guys. A lot of entrepreneurs just get lucky. I mean, it's, I'd like to say, hey, we designed this business, because this company, by the way, is uber successful right now. I like to say we were all brilliant, but we got lucky. We found Ernst & Young and Deloitte both had the laws changed. Remember when Anderson went under? The accounting firm caused all sorts of problems. The accounting industry had to bifurcate. They had to split consulting and processing. So these firms had all these tax payments that they could no longer make. And we had this kind of software. And one of them asked us, could you do it? And we figured out we could. Next thing you know, any bill, the name of the firm, they process about 95% of tax payments in the U.S. And that's how we got out of it. And they're extremely successful. I was telling Amanda this story earlier. Maybe I'll share it with you just as a soundbite. Another thing when you join a firm is, when you're in a private venture, you're in a public firm, you get stock options. The stock options come in, they have a market for them, you can sell them. When you're in a private firm and you get equity, it doesn't mean anything unless you have what's called an exit. So either you sell the firm, you go public, or you get the original investors to buy you out. But it's one of those three things. In this particular firm, I was a minority holder, I am a minority shareholder. The two partners own the majority, and they decided that they weren't going to sell. And to this day, they decided, well, we're not going to pay dividends, we're going to do other things with the money. So one of the partners now owns a 135-foot yacht, a 75-foot yacht, and a jet airplane. And I've yet to receive a dividend payment.
That's such an incredible point, because unless you have somebody that can buy what you've got that's theoretically worth something, it ain't worth anything.
Yeah. When they said they didn't want to sell, I took a job. I stayed on as chairman because I had a contract to stay on as chairman, and I brought money in. I brought a couple $1 million in. I did manage to convince the partners to buy those guys out. So that was nice. We bought out our investors at a good return. But I'm still involved with that. I have no power, no authority, I mean, nothing. It's just, my money just sits there and who knows what's going to happen to it. I got an extension on my warrants. Warrants, we don't need to go into that, but it's kind of like an option, but it only monetizes unless you sell. But I got those extended out for 10 years. So if you do run into a problem, you know, like what I'm describing, don't fight it. Just try to get extensions on all the stock and that kind of stuff, or ownership, or just warrants or options. Just try to extend them, because at some point they'll get bored and they will sell. I'm doing a pure startup right now. I don't even have business cards, and I've been at it for a year, and the reason I don't have business cards is we've changed our branding twice. So, and we're going to change it a third time. But I think of all the ways I've done startups, this is the best way, because I'm taking no financial risk. I'm getting paid. Not what I would get at Equifax, but I'm getting paid. And I've got a guaranteed spend. I mean, they're spending an X amount of money building the website. And what this is remember the thing with Ameritrade, it was a financial advice? We're redoing it now with upgraded technology. And this is more of a mission business. My mission in this business is to keep people from getting ripped off from their financial advisors. And so I would say the first 4 entrepreneurial ventures were money related, like I want to have fun, but I want to make money. This one is more, money would be fine, but I really want, it's a cause kind of thing. You get my age and you get more like, hey, what can I do to give back? What can I do to help people? And having spent most of my career actually, in the financial services business, and the 10 years I spent in product development, I know how all the products are designed. And I know what happens to people with those products. So this is an advice product that teaches people how to invest properly, not pay their advisor too much, buy the right products, buy the right life insurance, buy the right auto insurance. It's very basic but high quality advice. And we've got 2 partners with us that wrote a book. And then the technology firm that's investing in all this is the same group of technologists that built the product back in 2000. So I had the same team. And one thing I've learned with entrepreneurial ventures is there's a lot of untrustworthy people out there. And if you can find ones you trust, you go back to them and you get them again. So that's what I'm doing now.
Mm-hmm. Just so you're aware of it, we've had some interesting situations here because a lot of the wounded vets that are seriously wounded will get a check for $100,000. And early on, there was almost nobody giving advice or financial advisors or anything else. We even had things like BMW car salesmen peddling BMWs up in Building 62. A lot of things that weren't right. There's been financial advisors come in, there's been programs that have been set up. But for a long time, we had guys who would go buy Hummers and jet skis and spend $100,000 in the first 3 or 4 months, and it was a disaster. And you would have thought the program would have been originated here where you had so many women come back. And it was a horror show.
Well, I'm sure we would be glad to help.
I don't even know what the structure is.
We
now.
do it for
I
free.
do know there are advisors floating around.
We would do it for nothing. But I have some of the smartest minds in the industry working with me. And their book is excellent, by the way. It's called The 3 Simple Rules of Investing. And if any of you guys are out, well, I'll get you a free copy. But it's The 3 Simple Rules of Investing.
So there is another bank that is providing a similar service, like the Khan Academy. So how is your product?
The Khan Academy is a good product. It's written for people who don't have assets and need help establishing their credit history and borrowing. And it's actually an excellent website, and it's a good product. It's an honest player in the industry.